So some of the themes that we're looking to invest in a recessionary environment, we'd probably gravitate towards some of those investment grade bonds that we were worried about that now look like they're trading at distressed prices. So bonds like in the energy sector, some pockets of high yield, which we think are oversold. We'd also be looking at macro trading for the first time in about 10 years because we see a lot of governmental manipulation of markets coming. But by and large, if you look at us historically, going into a recession, we do some pretty clever things like buy the higher risk tranches of mortgages as an example, because many people have defaulted. Those prices are probably overshooting to the downside, and we can bundle up large packages of those at a very, very discounted price for our investors. So again, you'd have to think of us as opportunistic, very cold-blooded and very analytical in a downturn where other people are leaving. We would be a group that would be buying. And I think this is one of the big advantages of being a hedge fund manager. Lots of institutions sometimes, because they have to do something that's called window dressing. They have to dress up their portfolios for their boards that are probably not as sophisticated as they are. They have a tendency to sometimes shed the least popular assets so that when they go to board meetings, they don't have to explain that exposure. And so that's something that SkyBridge doesn't have to do. So when they oversell those tranches, we usually step in and buy them at steep discounts. We did that in 2010, 11, and 12, and we're planning on doing that right now. So we're sort of super excited about that opportunity. Quantitative easing sends a message to the markets that the Fed is opening the door for tremendous amounts of liquidity. And so when you have tremendous amounts of liquidity, if you're holding something in your inventory that you think is very, very cheap and is at a low price, it's offering a very high yield, you're willing to hold on to it because you know the Fed's offering liquidity. So if things got bad, you could pitch that security to the Fed, so to speak, or to that pool of liquidity that the Fed is providing to the banks. So being very good observers of technical patterns and understanding the prices will oscillate sometimes away from the overall fundamentals, we've been reasonably to very good at striking when there's a mismatch between where the prices are and where the ultimate value is. And I think that's starting to happen again in the marketplace. The refinancing activity is certainly going to affect the mortgage-backed security space. And the good news for us in our portfolio is when rates get jammed down as low as they are right now, you get a lot of refinancings. And so we own a lot of paper that is basically insulated from the lower rates. And so as those refinancings come, our bonds will get paid off, and that will create a lot of liquidity for us. So good news is that the lower rates and the potentiality of consumers refinancing their homes will have a benefit to SkyBridge because it'll provide more liquidity in our portfolio and give us the opportunity to rotate into things that are more distressed that we think represent better value here. You've heard me remark about this on television, or you heard Troy Gajewski, our portfolio manager, remark about this. This is the most defensive position that we've been in. And I have said openly that this is the most defensive position that I've been in personally in the last 31 years of investing. So coming into 2020, we had a very, very low beta, a lot of short-term bond exposure, a lot of structured credit in the portfolio. And so when the stock market started rocking, there wasn't a lot of things in our portfolio that were going to drop heavily in value. So that's worked to our favor. Now we're down again. There's no way, and we've always said this to people, if the market goes down 20 or 30 or 40%, we're not going to be up in that environment. Because remember, going back to 1900, the stock market is up 80% of the time. So it would be a very bad strategy for SkyBridge to get short the stock market or to try to time that. All we're simply saying is we look at trends, market looked expensive, we want to be defensive, and we want to wait for an economic crisis or an economic slide like the one we're experiencing right now to rotate into distressed securities to take advantage of that. And so because we had that low volatility and very short-term duration in our portfolio, we've really been able to preserve capital during this crisis.
All investments are subject to risk, including the possible loss of the money you invest. For more information about SkyBridge Multi-Advisor Hedge Fund Portfolios Series G and the SkyBridge G2 Fund, call 1-888-759-2730 to obtain a prospectus. Investment objectives, risks, charges, expenses, and other important information about a fund are contained in the prospectus. Read and consider it carefully before investing. This webcast is for educational purposes only. We recommend that you consult a professional advisor about your individual situation.